Ladies and gentlemen, good day and welcome to the Jupiter Wagon Limited Q1 FY23 earnings conference call hosted by Systematix Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jigar Kamdar from Systematix Institutional Equities. Thank you and over to you, sir.
Yeah, thank you, Renju. Good evening, everyone. On behalf of Systematix Institutional Equities, I welcome you all for the Q1 FY23 earnings conference call of Jupiter Wagons Limited. From Jupiter Wagons management, we have Mr. Vivek Lohia, Managing Director, and Mr. Sanjeev Kesari, Chief Financial Officer. Now I request Mr. Vivek Lohia to give the opening remarks, post which we will start the Q&A session. Over to you, Mr. Vivek Lohia.
Thank you, Mr. Jigar, for your introduction. Good evening, everybody, and I would like to thank you for being a part of this investor call of Jupiter Wagons Limited. I would like to start the session by mentioning that we are today in a historical era when it comes to the entire logistics business in India, and especially the railway business. I think with the vision of our Prime Minister and the Railway Ministry, today the growth which we are seeing in the railway sector is unprecedented and historic. And Jupiter Wagon being one of the forefront industries in the railway sector, we are in the cusp of showing historical growth numbers to our investors and taking the vision of the company forward in the next decade. As you are all aware that recently Jupiter Wagon and SEPCO both completed their merger, and the company was listed in the stock exchange in the name of Jupiter Wagons Limited. This created a synergy in the operations of both the companies as it consolidated the business under one roof, and in terms of both our financial strength as well as the infrastructure strength, we could utilize it in a consolidated manner. Jupiter is today serving the railway sector in multiple ways. We are one of the leading manufacturers of railway wagons, high-speed bogies, couplers, draft gears, and cast manganese steel crossings. Further, under erstwhile SEPCO, we were one of the leading suppliers of load bodies to the leading OEMs of commercial vehicles in India, and also the leading manufacturers of ISO containers in the country. Recently, Jupiter bagged a historical order from Indian Railways and the private sector. Currently, our order book is close to 4,700 crores, of which 4,000 crores is made up of railway wagons. The container business is about 60 odd crores. And the order for design, fabrication and supply of flatbed trailers and bomb carts, which is a new product which we have recently launched, is 6,830 lakhs. Again, the company has diversified into various sectors. We have done a tie-up with the leading manufacturer of brake systems in Europe, Daco CZ, and we have already got approval for supply of railway brake systems for coaches, and by the end of this year we are expecting the clearance from Indian Railways for manufacturing of brake systems for the freight wagons which are going to be supplied by Jupiter Wagons. This again gives us edge over our peers as Jupiter becomes one of the most integrated manufacturers of railway wagons, and it gives us both a sizable backward integration, which again is something which cannot be matched by our peers. Further, we have also entered into a JV with a company called Wagons to manufacture brake discs for the Indian Railways, for which we have already got the approvals. And also this unit will be used for exporting both brake discs and other castings to the European market. Already Jupiter has bagged, the JV has bagged the order of 8,000 lakhs this year, and we expect the business to strengthen in the coming years. Very recently, Jupiter, along with its partner Thales Allegria, has got the order from Indian Railways to manufacture weldable CMS crossing, which is again one of a historical order, which is for close to 4,000 sets of crossing, valued at 12,700 lakhs approximately. This is again these crossings again transform railway from currently trains which are running at 120 kilometers can run at more than 200 kilometers, because by supplying these weldable crossings, we are welding the crossings to the rails directly and taking out the fish plates, so that the tracks are much more smoother and the trains can run in high speed, which is in line with all tracks which are and the latest technology which is used in the European and the American market. Last quarter, our revenues was 295 crores, and we did a EBITDA of close to 30 crores, which was a jump over our performance for the same quarter last year. I would now give the line to Mr. Sanjeev Kesri, our CFO, who will elaborate on the financial results. Thank you.
Thank you, Vivekji. Good evening to all. This year revenue for the Q1 stands around 295 crores, against which our EBITDA margin is 10.25%, which comes to around 30.27 crores, and the profit before tax is 6.71%, which around 19.82 crores. This year, there is no cash outflow, as the company has a brought forward losses from the erstwhile ZEPCO. We charge the deferred tax of around 6.41 crore, which the tax is coming around 33%. The net profit after the comprehensive income is around 13.74 crore, which is around 3 crores higher than the Q1 21. Last Q1 21 is around 10.71 crores the profit margin. Mr. Vivek has already told you that our good numbers of order book. If you have any questions on these financials, so we will be happy to give the replies.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question comes from the line of Tushar from Kamayakya Wealth Management. Please go ahead.
Yeah. Good evening, sir, and thank you for the opportunity. So my first question is on the OEM front. So what is the outlook for the OEM, like the cores in this business, and going forward, how do you see this OEM business? How it can look going 2 to 3 years down the line?
Yeah. Good evening, Tushar. So on the OEM side, in Q1 21, we did a business of 730 vehicles, which this last quarter we did a business of 2,033 vehicles. So what my belief is that again, if the country continues to grow at about 7 to 8%, and with the infrastructure mobilization which is happening, I expect, and then the thrust of the government to bring the logistics cost down. So we expect more and more new varieties of vehicles being introduced and for higher payloads. So overall, we expect the business to, for the growth in this business to be very robust and continue over the next 2 years.
Fair enough. So the second question is on the JVs. So the brake disc with Covis and also the brake system with DACO and the railway crossing. So what would be the market size and our shares in these all three businesses?
So on the brake systems, first is our joint venture with DACO. So this year, Railway wants to buy about close to 6,000 LHB coaches they want to manufacture. So in one LHB coach, a brake system costs approximately 22 lakhs. So the market size is about 6,000 into about close to 1,200 crores is the market size for the LHB brake systems. Now on the freight side, given the order books which the industry has got, Railway expects supplies of at least 30,000 wagons in the coming 12 months. And again, each brake system is roughly about 1.5 lakh rupees. So again, it's about close to 3,500 crores. So overall put together, the brake business itself, the market size is about 5,000 crores.
Fair enough. So my last question. So I presume.
And also on the brake disc. Now this is for the brake system. Again, brake disc similarly, the Indian market is about close to 1,000 crores. So all put together, I can fairly say that it's about a 6,000 crore market. And on the CMS crossing, again, Jupiter has been one of the leading manufacturers of CMS crossings in India. They are already a Part 1 approved source by Indian Railways. So weldable crossings is a new design which has been introduced and which is now at par with the global standards. So till now, no firm has been given only, I think, 6 firms have been given trial orders by Indian Railways, and none of the 6 firms has been certified. So we are the first firm to get such a sizable order, and we expect our certification to happen by beginning of next year. And again, the market on an average, Railway is talking about buying close to 20,000 crossings every year.
Okay, sir. And sir, what would be your ideal EBITDA margin, like any target EBITDA margin which we keep?
For which business?
Sir, like I presume, like in this wagon business, so all the the bid is on the L1 basis. So whenever we bid, any target of EBITDA margin we keep while bidding
In terms of any target, I would not like to elaborate on specific numbers, but what you can, well understand, there are two things which is in our favor. Again, our capacity utilization. Now from quarter 2 onwards, because most of the order book it came to us in quarter 1. So quarter 1 was really not a reflection of our, the capacity which we have built and our deliverables to Indian Railways. That numbers will start hitting from quarter 2. So, given the order book, you can expect that our capacity utilization will be very high. And as I told you already, that Jupiter, being the most integrated manufacturer of wagons, our EBITDA margins historically has been higher than our peers. And plus, if you add us manufacturing our own brake systems, which is roughly about 10% the cost of a wagon, so you can, do the maths. It will definitely have a strong impact on our EBITDA margins.
And Ramesh, if you see our Q1 21 EBITDA margin, it was around 9.8%. And this Q1 22, our EBITDA margin has increased to 10.25%. So we are increasing and see how the other quarters go.
Yeah, fair enough, sir. I will get back to you. Yeah, thank you.
Thank you. Next question comes from the line of Ramesh Cheda from Spark Capital. Please go ahead.
Good evening, sir. Congrats on the great set of numbers. So a few questions from my end. So what would be the current breakup on the console basis? What will be the breakup between the wagons revenue and the CV business?
In this quarter, around 50% from the wagons and 50% from the 75% from the wagons and 25% was from the CV business this time. So you can say that, and also we have the business from the container. So if we include the CV and container both, it will be around 90 crores, and the rest is the wagon.
Okay. But you have to keep in mind, historically for the CV business, the third quarter and the fourth quarter are the strongest. First quarter is generally a weak quarter. So if you go to the third and fourth quarter, then the contribution from CV will be higher than what you see right now.
So on an annual, so for FY22, what can be the breakup, if I can get that?
We cannot exactly project the breakup at the moment, but definitely it will be higher than the percentage currently which you see in quarter 1.
Okay. Ballpark number, is it possible to share any ballpark numbers? For FY22, the historical year, previous year.
Oh, no, previous year numbers. Previous year, what was the breakup between CV and...
for the quarter you are asking, or for the year?
For the year. For the financial year, whole year.
For the financial year, just a minute. Give me a minute. Around 800 crores from the wagons, and from the other business, CV business is around 300 crores, and rest is from the crossing and the container.
Okay. So going forward, because of the CV cycle turnaround, what kind of growth do you expect in each of the segments for next 2 to 3 years?
See, again, as we have clearly mentioned, our wagon order book is already very strong. We have close to about 4,000 crores of order book in the wagon segment. So similarly, again in CV, better than us, the OEMs will be able to give you better guidance of their expectations, because our CV business is dependent upon the business which the OEMs can generate from the market. But we are, as per our with projections, our understanding from the OEMs, we should do a business 4,300. 430 crores. I think this year we expect to do a business of about 430 crores.
Okay.
Compared to 350 crores which we did last year.
Compared to?
300 the business which we did last year.
So almost at 33% growth is what you are expecting.
Yes.
Okay. That's good.
I think which is in line with the the growth forecast of the economy and the expectation in the industry. Because last year you have to also understand the entire auto industry went through a semiconductor crisis, and plus there was also COVID months. So we expect this year the business to be far robust.
Right. And in terms of margins, as you mentioned that around 10% will be your EBITDA margin on a consolidated basis. Can we get a further breakdown in terms of wagons and the CV business? And even the braking system, what is the margins that you are expecting?
So in the braking system, I think the margins will definitely be, since it's a technology-driven product, and again in India, there are only 3 approved sources for this product, and given the market size is about close to 6,000 crores, we expect our EBITDA margins to be much higher. But exact numbers I will not be able to tell you immediately. And last year the breakup between the CV and wagon, that I told you, 800 crores and 300 in terms of the percentage. That I don't have. I think that we don't have right now, but we can share that numbers with you.
Sure. We'll connect offline for that. That's okay. That's understandable. And so I was going through one of the news articles before merger. I think what you have mentioned is you are also looking towards leasing of wagons. Is that a business model that you are thinking about?
Currently, that is not our focus area. Our focus area is in terms of executing our current order book, as well as now with railway encouraging the industry to produce new designs of wagons, and railway is ready to give you the IP for those designs. So I think and with a strong partner like Tata Wagons, who is the leading manufacturer of wagons in Europe, our main focus is on the wagon business on the execution as well as introduction of newer designs of wagon which will which will be in line for the requirement of the DFCC.
Right. Got it. So if I look at a bigger picture, so next 5 years or 7 years or 10 years down the line, where do you see Jupiter Wagons as a business? Because I think this 4,000 crore order book is good enough for you to drive the business for next two years. And in a longer term perspective, where do you see Jupiter Wagons as a company?
So as if you look at our press release and as a vision statement of the company, we always say that we are a complete mobility solution provider. So wagon is, yes, one of our core businesses, and we expect this order book to become stronger because the railway has projected a requirement of another close to 50,000 wagons in the coming which tenders they are going to. We expect the tenders to come out in the next 6 to 8 months. So plus there is a robust demand on the private sector. But again, as we have told you that the brake business is going to be a huge focus business for us, where we now with Vande Bharat being introduced and newer designs of brake systems and more high-speed brake systems required for Indian Railways, our partners can contribute much more in terms of technology. We are thinking of setting up an R&D center itself in India to cater to both the requirements for the Indian design as well as for upgradation of the European design of brake systems. So that business we are expecting, we are looking forward to that business, and that is, takes us higher on the technology curve. So the focus is more and more to go upward on the technology curve and to always be, the best, to give the best quality at the lowest price. So that can be achieved through backward integration, where you have control over your quality as well as you can produce at compared to your peers at the best price. And as finally, again, since we have about more than 20 years of experience in the commercial vehicle business, doing bodybuilding for the OEMs and then also directly supplying vehicles. So now we have decided to move into manufacturing of electrical vehicles ourselves. We have recently tied up with a company called Green Power Electric Mobility. It's a company based out of US and Canada. It is listed on the Nasdaq Stock Exchange as one of the biggest manufacturers of EV commercial vehicles in the North American market. I believe it's got an order book of more than $600 million. They have vehicles ranging from 7 ton all the way up to 30 tons. So that business is something which we are looking forward to, and hopefully, beginning of next year, we should be launching our first vehicle in India.
Okay. So, can you throw a bit more light on what is this tie-up exactly about? Like, is it a technology transfer tie-up, or is it a JV in terms of manufacturing in India? What exactly is the agreement between Green Power and Jupiter?
So it will be a JV to manufacture vehicles in India for the Indian market.
Okay. And so will it be a 50-50 JV, or it's yet to be negotiated?
It is yet to be negotiated.
Okay, got it. So, okay. Thank you. That's all from my side. I'll join the queue eventually. Thank you so much. Thanks for your time, sir.
Thank you. Next question comes from the line of Anurag Jain from Art Ventures. Please go ahead.
Yeah, hi. Could you give the breakup of the brake market again? You mentioned brake disc was about 1,000 crores. If you can repeat for the other 5,000 crores, it's the breakup on that.
5,000 crores was for the market, is for the brake systems for the LHB coaches, which are the passenger coaches in India, and the freight, the brake system which goes into wagons. That put together is about a 5,000 crore market, and brake disc. So overall, the market is about 6,000 crores, which does not include the metro brake system markets, and now the Vande Bharat train sets which Indian Railways is introducing.
Sure. And LHB coaches, you mentioned 22 lakh per set and about 6,000 coaches, so that's 1,300 crores. And wagon would be the differential.
Wagons would be the differential.
That's 1,50,000 per set, you said, or per wagon?
Yeah, roughly it's about 1,60,000 rupees per wagon is the current price of brake systems, and we expect, as per the railways order book and the private orders which are there, the expectation is that industry would be producing close to 30,000 wagons annually.
Sure. And currently, who are the market leaders in this segment, and what kind of market share you think can we gain over the next, say, 3 or 4 years' time? What's the aspiration on that side?
So I can't tell you on specifics on the market share. So there are currently 2 main players in this industry. One is Knorr-Bremse. It's a German company, and second, it's a company called Febri Webtech, which is an American company. These are the 2 leading companies, and again, the entry barriers are huge in this segment because you need UIC certification, means European Union certification, to be approved source to supply to Indian Railways, and plus the homologation cycle is about close to 2 to 3 years. So globally, only about 3 to 4 firms are approved. One being Knorr, second Febly, third DACO, with whom we have a JV now in India, and I think the other significant player is Siemens in this business. And if you look at the freight business, as you know, Jupiter's, for us, that becomes a captive business for the brake systems.
Sure.
And again, for the Kovis JV, again, our focus is more, it's on the Indian market, but greater focus is also on the European market, because as you're aware that the costs in Europe, the production cost is already going up because due to the power crisis which they are facing. Otherwise, also, historically, now they have issues with regard to availability of labor, plus the environmental costs are much higher than in India. So we believe that we can, with the design and the technology from Kovis, we can contribute greatly through exports to the European market.
Sure. And given that it's a technology product and given the entry to barrier to entry, would the margins be significantly higher versus the wagon business? Can we do 18-20% margin on this?
So honestly, I cannot tell you on the exact numbers, but definitely, again, Knorr is a listed company, so you can go to their website and see their numbers. So you will get a flavor of the EBITDA margins, but definitely the margins are higher than the wagon business. And the good thing for us is we've gone through, our accreditation is already done with Indian Railways. So now, I think from the last quarter of this year, you will start seeing revenue in this operations.
Sure. Thank you so much. That's it from my side. All the very best.
Thank you. Next question comes from the line of Tushar from Ratnawali Securities. Please go ahead.
Good afternoon. Sir, could you please give the breakup of our wagon orders and some insights into how much is it from the Indian Railways and private order book? And also, if you could shine some light on what is the situation of your wheel sets. Like, what kind of arrangements have you made to mitigate wheel set shortage in India?
So if you look at the wagon order book, it is close to about 4,000 crores. The breakup. Just a minute. I'll just give you the breakup on the
2,400 crores is from the railway.
2,400 crores is from Indian Railways and 1,600 crores is from the private sector. So when it comes to Indian Railway IR orders, Indian Railway is committed to supply the wheel sets from RWF, and RWF has already ramped up its capacity, so we don't see any shortage on wheel set supplies from RWF. As well as now they have given a huge order of importing axles from China. So axles was the bottleneck, which I think they are going to mitigate by importing axles from China. On the private order business, we have already placed the orders for wheel sets on the Chinese players, and we expect the wheel sets to start coming from October onwards. So there we are not dependent upon RWF or Indian Railways on the wheel set supplies for the our private business. And we have covered today, as of today, on the private side, our order books are completely covered with wheel sets from China.
And so just another follow-up question. These orders, could you please shine some light on what is the raw material escalation clause built in, or if it's not built in, and how we've handled the volatility in raw material prices over the last, let's say, 3-4 quarters?
So in all railway contracts, there is a escalation clause which is already built in. So for us, raw material escalation or de-escalation in raw material is a pass-on. So that doesn't have any significant impact on EBITDA. And on the private side, as you're aware that when we take an order book, we get 30% mobilization advance from the private players. So generally, historically, as a practice, we book our raw material immediately on the receipt of the advances. So on that side also, I would say that we are pretty much covered.
Oh, thank you, sir.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Ramesh Cheda from Spark Capital. Please go ahead.
Thanks for the opportunity once again. So one question, actually two questions together. What is your capex plans, and how are you going to fund that capex plans for next 3 years? And where will be your capex? In what segments will your capex be?
So capex funding will mainly be from internal accruals only, because we expect our cash flows to be very robust, and mainly the capex will be for the existing business. It will be just replacement capex, because during the COVID years we were anticipating these order books from Indian Railways, and we have built our capacities in anticipation, and acquisition of SEPCO was one of the prime reasons for expansion in our wagon capacity. So the most of the capex which will go in will be towards our brake business, as well as the metro business, which we have now a JV with CAF.
Yeah, and Ramesh, you can see our balance sheet also of the March 2022, where we have an operating cash inflow of around 114 crores. So we have a sufficient cash, internal accrual cash in hand to do all the capex.
I'm sorry, I missed. What will be the capex amount for each year?
The planned capex amount you are asking?
Yeah.
See, in the planned capex account, in the Jupiter, we do only the replacement or refurbishment, which is around 10 to 15 crores in a year. And for the JV companies, we are doing some capex.
So most of the capex on the JV side has already been incurred by the company, and that too because since most of our JVs are 50-50 JVs, so again the capex is shared between both the partners. And as Sanjeev told you that we have if you look at our last year numbers, we have a surplus cash.
Yeah, 114 crores.
About 114 crores of operating cash, which we expect to become more robust as our numbers become stronger this year. So it will mainly all come from internal accruals.
Okay, so no fresh requirement of debt or anything. All the fundraise will be required in near future, right?
So right now, very difficult to predict, but we don't foresee a very strong requirement.
Okay. And on a steady-state basis, what are the ROEs and ROCs that you expect?
Can you speak from little far from your mouthpiece because it is echoing, not very clear.
I'm sorry. Is it better now?
Yeah.
Yeah, it's better.
Yeah. So on a steady-state basis, what is the ROE and the ROC that you expect from the business overall?
The ROE of March 2022 was around 7.52, and we expect that it will be higher.
See, as I keep on reiterating, our order books, we have, I think if you look at over the last 5 years, we have now one of the strongest order books, and plus the company is much more diversified. We are now in various other segments, which are again historically the EBITDA margins are higher in those segments. So, you would definitely expect those numbers to become better.
Any guidance on that?
Guidance?
Yeah, any guidance on to what extent do you expect?
Honestly, it's very difficult to give any kind of guidance, but definitely we expect the numbers to be given the the order book and our thrust towards backward integration and bringing our costs down, plus entering into businesses with better EBITDA margins. So definitely we expect the numbers to be much stronger.
Okay, sir. Thank you so much, sir.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Tushar from Ratnavali Securities. Please go ahead.
Sir, a couple questions on our JV and technology partners. So could you please, tell us if you have what kind of arrangements do you have with them? Do we pay any kind of royalty to them or technology transfer fee apart from the profit sharing from the JV?
So when it comes to our JV with Covis, there is no royalty or technology transfer fee which we are paying to them. It is a pure 50-50 profit sharing. And in case of DACO, the numbers have not been frozen as yet. But then again, if there is there is no royalty, and if there is some technology transfer fee also, it will be very minuscule.
And it will be a part of CapEx.
Okay. And what about, sir, the other companies, Tatra Wagonka, Talaris, and LAF?
So Tatra Wagonka is a promoter in Jupiter. They have a minority shareholding in Jupiter, so there is no question of any royalty which they charge. Again, in case of Talaris also, it's a pure 50-50 JV with profit sharing, no royalty, or any kind of transfer of technology fee.
And sir, do we plan on banking some of these partnerships to get deeper inroads like Tatra Wagonka into Europe?
As I told at the very beginning of my call, one of the with Covis, our focus is the European market. We already have a order book from them for about 80 crores. For the next year, which we expect the order book to, and this is for the European market, and we expect this order book to become much stronger over the years.
Okay. Thank you, sir.
Thank you. As there are no further questions, we have reached the end of question and answer session. I would now like to hand the conference over to Mr. Jigar Kamdar for closing comments.
Thank you, participants. Thank you, management, for your time and give us opportunity to host these calls. Thank you, everyone.
Thank you, Jigar. Thank you.
Thank you, Dol.
Thank you. On behalf of Systematics Institutional Equities, that concludes this conference. Thank you for joining us. You may now disconnect your lines.